For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with...
Hey trader, Stacey Burke from Stacey Burke Trading. Today we'll combine a technical video again with mindset reset and going over some situations, some questions that have arisen today, Monday, day one, front side of a new week. But looking at the bigger picture in terms of understanding the type of trader and the type of trades that you want to take. Not necessarily trying to trade every movement in the market, but identifying the ones that you resonate with the best, understanding which ones give you the best asymmetrical risk-reward opportunities, how you identify those trade setups, whether it's from the playbook, first green day, first red day, breakout traders in the markets, inside days, day zero templates, but also exercising restraint, knowing when not to trade, no setup, no trade, and not just trying to trade every day regardless of the types of setups that are there. And we'll look at some different types of setups that occurred today, but also recognizing, again, the higher time frame templates, where my focus, again, is rinse and repeat. I'm going to talk about the types of setups that I like to trade and that I'm looking for. And then when markets are distended out or we have large moves that have already occurred in earlier sessions, recognizing where there may not be the same type of opportunity. Again, Monday, Tuesday, Wednesday, the front side of a week, Wednesday, Thursday, Friday, the back side of the week, and then major red news. My goal, my objective is to identify only the best trade setups. So yes, you can trade. You can trade every day. You can trade lots of different ways. So again, coming back to my first point, identifying the setups that you resonate the best with and the type of trades that you want to be positioned in. Some traders are quite happy to just take a position in the market, put their stop in place and a profit target, walk away, let that trade play out. Now, my main objective, my main objective is I'm looking for the scalable opportunities. So I have stepped back from trading as much and trading less but with more size on scalable rinse and repeat opportunities. And as I mentioned, one or two of these trades each week that are scalable can significantly compound your account. So getting into markets where my odds are less just to get a trade really is sort of not part of my agenda. Early days I traded more frequently, but as size increases and you're looking now for putting trades into markets that are potentially going to be moving strongly for the duration of that session or even the day, that are scalable, definitely has my interest more, which is why we're going to go back over just the big picture from the playbook. Specifically today, we'll look at markets that are in breakout. Several questions came up regarding this, and we'll revisit some simple ideas regarding the difference when markets are in breakout versus a 3-day breakout setup for either a reversal or even a trend trade. Now, one of the pairs that has come up today with a lot of questions is the British pound. It's Monday, day one on the front side of the week, and we have a market that started to break down from a first red day signal last week, breaking down through the low of the month and continuing to break lower. Wednesday, Thursday, Friday into the closing range of the week, closing in breakout. And then Monday breaking lower and continuing to trade lower. Now I just want to show traders we're actually at the low of the year and we've taken out the low of last year. So we have a market that's continuing to trade lower. Now when we have a market breaking down like this, we have all time frames in the market short. And counter trending this market may provide traders with an opportunity for a session nail and bail. But I want to paint the understanding that, as I mentioned to one trader today, you're trying to trade against all the time frames. I don't have a inside day. I don't have a first green day yet. I don't have a 3-day breakout type of setup, and we'll take a look at that. We saw something similar at the end of November. We have 3 days of breakout longs in the market and a reversal day following that. We had 3-day longs at the beginning of December. 3 days of breakout traders or long buys into December that gave a reversal at the high of the month, the new month. We had 3 days of breakout traders at the end of September that traded higher and then gave a reversal day. Again, timings, levels, behavior of price. We have new weeks starting, new Mondays. So my goal, my attack on a market like this, I have zero interest in trying to counter trend this market until I get a signal day. Now we have our Monday continuing to trade lower, and we have a reversal at the low of the day, the low of the week level heading into our US session. So again, there are opportunities for nail and bail, but the question remains, is that the setup that you're hunting because something is down low or up high? Now, if we go to our smaller time frame, we had a nice low-hanging fruit reversal right at the beginning of our US window. Nice pin hammer, our universal entry criteria met right in the beginning of the US session. A nail and bail opportunity, and as some traders may have just put a stop in, a profit target, and walked away. Now, the question remains, is that the setup that you're hunting? So I look at a market like that myself, and yes, it can be traded, but is there somewhere else where there's easier opportunity or a more scalable opportunity for a rinse and repeat setup that I could have more size on, or was, or, the nail and bail itself? If I was to have taken this, I would have taken the money. I would have taken the money, a 25 pip stop hunt, locked it in, not interested in holding it for that length of time. So the decision is up to the individual trader, which is again coming back to discretionary trading. Traders need to make those decisions themselves and have that plan of attack established before they even get into the market, where you're getting in, where you're placing your stop, where you're taking profits. And if it's a nail and bail, locking in the money, walking away. It's Monday, the opening range of the week. We're counter trending higher time frames. We're at the low of the year, and as I mentioned, it's a nail and bail. It continued to grind higher. Whether or not it gets there or continues to go higher is not my goal. For myself is not the setups that I'm looking for. It's a 3-session setup. It's a great opportunity, but again, counter trending all those higher time frames. There's no doubt this trade is going to continue to grind slower as it's reversing or flipping the book. Now, one trader mentioned today they had a beautiful trend trade on the Swiss franc. We went over this chart last day, explaining the difference between this and the Japanese yen. This market coiled sideways and continued to trade higher after non-farm payrolls. No indication of a reversal in sight. This market continues to trade higher. This market closed in breakout after non-farm payrolls, and as we headed into our US window, gave a beautiful trend trade continuation, an easy money trade setup, aligning itself with the higher time frames. Market closed in breakout, continued to coil sideways. Train your eyes to move horizontally at the levels, making higher highs at the end of our London window for a dump and pump off closing price, continuing in line with the original breakout and trend trade opportunity. A beautiful trend trade opportunity, easy money, no stress, in line with the original higher time frame. Now, if we contrast the pound yen against the pound, we just saw the pound. It's at the low of the year. It's taken out last year's low. We have the pound yen that also had a first red day collapse last week and closing in breakout, and then continuing to trade lower today, Monday, day one, the front side of the week. But we're trading down into a previous month that closed in the bullish direction, the long direction. We're trading into higher time frame longs potentially. So contrasting that with the British pound, where it continued to break lower and we're at the lows of the year and we've taken out last year's low, this pair, the pound yen, potentially, if for traders who are looking for reversal, now we've cleared out all those wicks and we're trading back down into the breakout the original breakout from the beginning of the month. Now, the reason I'm demonstrating the contrast is that if you're looking for this type of reversal, the pound yen may have been the better pair to trade. So just comparing that with the pound, we have a market that gave a beautiful dump and pump into the US open window, 8:25 a.m., and a larger range targeting for profit. We still have our universal entry criteria met, and that market popped up and continued to trade higher. The British pound broke higher, went vertical on the stop hunt, and continued to trade higher over the next few hours. This pair offered a larger range and also potential area of where higher time frame buyers may be coming into that market. So again, you've got the British pound, we've got the pound yen, both in breakouts, contrasting and looking at where they're at in the higher time frame. How does price behave on the day? Now, nail and bail, again, still counter trending the higher time frames, but if you're looking for that reversal, low of week, low of day, 3 days of breakouts in the markets, I would have been targeting a pair that gave me a larger range for profits, potential profits, and also evidence of higher time frame buyers possibly stepping into that level. Again, I'd like to just show the difference to traders, not thinking that every single 3 days of breakouts are the same. There are different types of setups for reversals, 1, 2, 3, near the high of the month. We're still in the front side of a new month, and we're in breakout to the downside with higher time frames driving this move. How does price behave on the day? Well, if we contrast and look at the high of the month reversal, number one, that occurred on a Monday. So it's Monday today, but the market continued to break lower. It's broken down. Now, this is December 30th, and again, this is the type of setups that I like to look for. The reversal template after 3 days of breakouts. This trade requires zero thinking, zero stress. It has zero stress, zero emotion, and zero management. This is an ACB reversal after 3 days of breakouts. There's nothing to do. There's no pushes to count. There's no higher high, lower low. It's all daily levels. We have our 3 days of breakout traders in the markets. We have our US session beginning. We have our coil sideways inside of our basic model for trade entry criteria. Any more added to that is just analysis paralysis. There's nothing else to do. It's zero thinking. Now, if we contrast that to today, we had Asia session opportunity to continue the short trade. A beautiful continuation for Asian session traders. A dump in the London window, and then a nail and bail reversal opportunity in our US session window. A simple, basic reversal trade, but not the same as a scalable ACB from the high of the week, the high of the month after 3 days of breakout traders. We're still on the front side. Again, understanding the type of templates that you're in, and then being able to identify the potential best candidate. We have a peak formation put in place. That's the low. That's the low of the day. Our thesis can be that the low of the day is locked in. They trade back into that level. Now, chances are by the time the end of the day closes, that will be the low of day level. So we got a peak formation formed in the London window. As I've mentioned, these daily levels are formed in sessions by peak formations that the next day will form those extremes. So just trying to find peak formations everywhere is not my objective either. And trying to catch the low or catch the high is not my objective. Where's the easy money? Now, this is an excellent nail and bail reversal. The British pound gave an excellent nail and bail. If a trader wants to hold on longer for that potential continuation, that's a decision they can make. They can leave a trailer, they can take some of the profits off, or just be happy to have the nail and bail, or take the trade, put a stop in, a profit target, walk away, and leave it at that. But understanding that you're trading against higher time frames that are still driving this market. And we're looking at spot crude, and one of the comments that came up over the weekend was they were looking forward to shorting this eventually and catching a big move down. Now, I want to just reinforce that markets can continue to trend. They can continue to go up. Just because a market is in breakout doesn't mean that it has to reverse and go the other way. Now, this market continues to strongly go in the long direction. As I mentioned, this came out of a short squeeze template. If we go to our weekly chart, we have a massive short squeeze that built up over the year. Now coming back to Peter Brandt, classical charting principles, we have a breakout candle right at the end of December and continue to break higher, 1, 2, 3. Now we can certainly get a reversal week. Think of this, if this is a weekly chart, we may have a market that can give us a week that reverses against this explosive move. But in the short term, why would I want to just try and catch the high and counter trend a higher time frame where this market may continue to break out and trend? Don't know. But if we get a template that sets up for a reversal day, we can get a high of week to low of week reversal in one day, and that market can continue to trend into the close of the week or into the new week. So we could have a reversal week, but I will not counter trend until the market gives me that setup. Now we could certainly have a session opportunity. Again, a market that continues to break out and coils, we can get a one-day reversal. A one-day reversal against a stronger trend. Or we can get a one-day reversal that sets up perfectly for a trend trade. Aligning ourselves again with similar to what we just saw in the Swiss franc, a nice coiled market for an explosive continuation move. But just trying to sell against higher time frames is a recipe for disaster in some cases. The Nasdaq took out the low of the month, the new month, and then continued to trade lower again today. Continuing to trade lower again today. So we still have a market that's breaking down. Now there were reversal opportunities. So coming back to looking at what's left and recognizing where higher time frame buyers have come into the market, and an area where a reversal opportunity may have come in for a nail in bail setup. And we see an explosive reversal that's come into the new 4-hour candle rotation. A nice explosive reversal happening just at noon. We'll just highlight that for traders. I know there were other traders who took some of the reversals from the high and the low on both sides of the range, nailing and bailing. But just coming back and recognizing that on the higher time frame, no reversal signal day, no first green day yet. Just a market that has continued to trade lower highs and lower lows. Now the Dow also closed in breakout and opened and traded lower, but again, just recognizing different areas on both markets where they traded into higher time frame buyer levels. And how did price behave in the session just prior to our U.S. window opening? Just as our 8 a.m. hour started, we had an inside bar at 6 a.m. and then an engulfment pin hammer. The 8 a.m. open, the 7 a.m. closing candle gave us an engulfing pin hammer, and that started an explosive move back up into higher time frame sellers from Friday's close. We had low-hanging fruit down low and a beautiful explosive move back up into those higher time frame sellers from Friday's U.S. session. So again, contrasting the two templates and recognizing which one may have offered the best behavior of price at the levels into the timing window. Beautiful reversal opportunity on the Dow Jones 30. Now we went over gold last day, recognizing that it closed on Thursday in breakout outside of the previous week's high, and continued to trade higher on non-farm payrolls, taking out higher time frame highs to the left from the previous month, and closing in breakout at the high of the week. Now this gave traders in London a beautiful short. Remember, train your eyes to move horizontally at the levels. We have a market that's closed in breakout, the third consecutive breakout, coiling sideways, third consecutive bullish close, closing in breakout, and then coiling sideways. Universal entry criteria aligns all time frames for the short into the end of the London window. Now this market continued to trade short. It did not break out of the low of the day level. Remember what I said, when a market coils sideways, it's Monday, day one. There's no reason for this market to all of a sudden explode and reverse. There's no major red news on the calendar. We have a pump and dump continuation, third hour, our 10 a.m. hour, when the new 4-hour candle begins for traders in the U.S. session who wanted to short that market. Now, ideally, the ideal setup for me is then that market gives a 3-session setup from up top for the all-in collapse, as we saw in the pound yen example. But in this particular case, the low-hanging fruit after the pump up, and we'll just put this in simple terms, will demonstrate a pump up on the higher time frame. We have our 1 hour pump candle closing at 9:59 a.m. and our 10 a.m. club opens at our bull candle pump for the dump back down. So just reinforcing simplicity, keeping things really simple. There's no need to count pushes. Pay attention to timings. Everything is timed and measured. 10 a.m. is the beginning of a new 4-hour candle. If we step back, keep things really simple, we see our 4-hour trend is still down. We have no reason to counter trend this move right now. Taking out higher level pins from last week's bullish close and breakout from the previous week's high. Now, opportunity again in London up high for the collapse. You'll notice the close of the 4-hour candle, the London window, and the collapse Europe open all the way down from the high of week level. So just focusing on simplicity, not just saying because it's in breakout that I'm going to counter trend. And if you are going to counter trend, what's the best setup? Which instrument offers us the easy money opportunity? Which one has the best asymmetrical risk reward? Anybody can try and read every market every single day and catch the move. But what opportunities do you align with the best? Where your skill set lies, where your emotional state resonates with the best? As I've talked about, I like ACB templates, scalable in size, and they're not coming back. There's zero stress. There's not a lot of lag time where I'm sitting there for 2 or 3 hours waiting for it to continue to go. When ACB templates go, they don't come back and they move quickly. Other opportunities for nail and bails in the meantime as the front side of the week is just getting started trading. Hopefully this video helped clarify some of those points for traders. Keep it simple, step back, align yourself with the higher time frame opportunity when it presents, and sit on your hands in between. Don't do anything to damage the good results that you get. Keep things as simple, repeatable, and scalable as possible. Have a great day, traders, and may the markets go with you.